Hi, welcome to the InterAxis channel and InterAxis.io. So today I want to talk about real-world assets. We've been talking about the merging of traditional finance and DeFi and why it's so important to bring all those assets, all that value that's available in the traditional world on chain, as we say, because now we're talking about all the different primitives we built, the stable coins and the lending capabilities and the borrowing capabilities and the exchanges and such, all that are in the past have only been trading essentially crypto assets. They've only been based on collateralization, has only been based on crypto assets. Now we have the ability to take real world assets and bring them on chain. So remember, several videos ago, we talked about SocGen or Societe Generale that was basically tokenizing. They tokenized a bunch of mortgages, took those tokenized mortgages on chain to Maker, and they borrowed a bunch of DAI based on those tokenized mortgages. Well, now what we're seeing with a combination of Aave and Centrifuge is this tokenization of other real-world assets or other assets that are within the traditional world that are now coming on chain. So I'm not going to go into all the technical details in here. More than anything, I'm going to talk about why this is so important and why we're kind of excited about this. What's happened, and first we have to go back to part of the problem. So if I operate a company, we can talk about real estate to start with, but we'll also talk about other assets or other parts of the traditional finance system that are really important. But if I operate a company and I want to purchase or I own real estate, okay, one of the problems with taking this real estate and borrowing money to go buy it is, okay, I have to either go to a bank to borrow money for it, or I can go to friends to borrow money, or I can go to some company that lends money to people like me who are investing in real estate. So I either have to go to a bank, which of course, remember, that bank is using deposits in the bank, so they've been charged with only taking on certain risk, right? And they're going to charge me some level of interest based on the risk that they're willing to take on. Or I can go to, private company, private equity, we'll call it, in which case they have certain restrictions as well. They have a certain amount of capital, and I have to play by, kind of by their rules. Or I can go to, friends and family. I can go to just individual investors, which is very much like private equity, but I can structure each real estate deal the same. Anyway, these are essentially my options. Now, part of the problem with something like real estate is there hasn't been an ability to on-chain to exchange that asset. What do I mean by that? I mean that if I wanted to take this real estate on chain, for instance, tokenize it, whatever I wanted to do, go on chain and borrow from DeFi protocols or borrow from people that connect their wallets. The problem is, utilizing this real estate as collateral, these people cannot collect this. They can't come and kick me out. They can't own it because ownership is based on the government. It's based on in the U.S. based on the state or the county where I am. So just because a token changes on chain right now doesn't necessarily mean that ownership or the deed or the title to this particular piece of property changes. So that's kind of been a problem, is the merging of the on-chain and the tokenization, that ownership with whatever the government says is, whoever the government says is the owner. So that's a little bit of part of the problem. Now, if we go to other types of financing, other types of assets, and we've talked in the past about supply chain financing or inventory or inventory financing or factoring. Factoring basically means that someone's going to buy my receivables. Okay, so that means that if I invoice Ron and I say it's net 45 days. Okay, so I invoice Ron $1 million and he's going to pay me. He has 45 days to pay me. Well, the problem here is I might need that $1 million to go pay my people. I might need to pay for goods. I might need to pay for raw materials. I might need to pay for people that are delivering, right? Ron might already have the goods, and now I need to pay the shippers that delivered and everything. So I can't necessarily wait that 45 days. So I might be willing to take $850,000 from someone because I have to go pay my bills today so that I don't have to declare bankruptcy. So this would be quite a bit, but that would be 15% that I'd be willing to pay someone to basically to give up. And so I take my $850,000, and this is just factoring. Someone else basically takes on this receivable, and they have to go collect from Ron, and when Ron's $1 million payment comes in, it goes to someone else and not me. Now, this makes this type of relationship also, we haven't seen it on chain as much, although it's starting to move there. We see groups like Hive Terminal in Europe that are doing something like this. Well, now what Centrifuge has built is a chain. They built their own chain, although now they're moving to Polkadot, where they are able to. They've created the frameworks that say we're going to give loan originators the ability to create these loans, and what we're going to do is this has been the big problem, is there hasn't been a framework that says here's what all the data, the legal work, everything that has to go into something, it has to go into a token that goes on chain. Okay, because we need that framework to be the same every time. We think of it in crypto or DeFi terms as a protocol. We needed a protocol or a framework that takes the data and the legal work and everything else that is involved in, for instance, factoring, consolidates it in this framework and says, okay, this is going to be the same every time. So we can take this framework, create a token for it, and put that on chain. And once that happens, now this can potentially be used as collateral on chain, which is really important. How would that work? So again, I might have, I might be factoring my loans, or I might have these receivables out there. I might have $1 million in receivables, and I want to go factor them. Now, instead of having to go to a factoring company where I'm going to have to pay 15%, what if I could take those receivables, put them in this framework, which was created by Centrifuge, and tokenize it? So now it creates a token that everyone agrees to. Now, instead of having to go potentially pay 15% to someone, what if this framework, part of this framework is it's going to invoice Ron, and Ron is going to be able to pay this framework or this particular token. Now I can use this token as collateral, right? And I can go on chain and borrow from people who have DeFi wallets. And they can go take a look at it and say, look, I'm willing to lend you money right now, and when Ron pays, it pays the token, and therefore I will get paid. I, being the DeFi lender, will get paid from Ron. And the DeFi lenders might be willing to go less than 15% because they've looked at this framework and they've said if it fits in this particular framework, if the legal work is there, if we're pretty certain we're going to get paid because they've done their research on Ron, maybe we'll take 11%. And again, I'm making up the numbers. I don't know if these are the actual percents. So what they've done now, what Centrifuge has done, is built this framework. And the framework has been sufficient to be able to go to Aave, which of course is the DeFi lending pools, and say, look, we are going to be able to take this framework and these tokens now, and Aave and Centrifuge together have created these liquidity pools. So now the DeFi lender can connect their wallet. So I connect my wallet, I look at these liquidity pools, and then I say, look, I'm willing to put some money into this liquidity pool. I feel comfortable with this framework. And therefore, if I come in, or this DeFi lender, we'll call him, or we'll call her Alice. Alice comes in, puts 50,000 USDC or DAI into this pool, into this liquidity pool. I can now come in with some of my framework tokens, these tokens for these this income that's going to come to me from Ron later, and say, look, I want to borrow 50,000 DAI. I have to put up maybe I have to put up some level of collateral here, right? So I probably have to put up, $51,000 worth of these tokens, but now I'm going to borrow money from this liquidity pool, and my tokens are going to be used as collateral. This is a really, really big deal because there's so much more of the world that runs on debt like this. This is very short-term debt, but it's needed for working capital. Working capital debt is a huge piece of the world economy. Just getting people their money in a shorter amount of time so that they can go pay their bills today that they have to pay in a shorter amount of time. The difference between net 45-day payment and net 15 payment is huge, and so many companies have issues or go bankrupt or have overdraft charges or something just because they can't match those up. And being able to match those up is huge, and giving DeFi lenders, giving people with wallets all over the world the ability to participate, and not just banks or not just companies that specifically do invoice factoring, the ability, giving others the ability to participate in these liquidity pools is part of the essence of decentralized finance. It's exactly what decentralized finance is created to do. It's to give me, if I have a DeFi wallet, the ability to participate in other liquidity pools, to be able to lend money. Centrifuge has given the framework. And the first app built on top of Centrifuge, by the way, or DApp, is called Tin Lake. So Tin Lake is actually the one that's doing this. So given the framework so that I can feel comfortable if I'm the lender with the fact that if for some reason this isn't paid, I can collect somehow. Okay, that's the key, is I need to be comfortable with the collateral, and whatever that collateral is in terms of real world assets. I need to be comfortable with the collateral. I need to be comfortable with the legal framework is there that says that I will be made whole based on this collateral. This is huge because maybe as a DeFi lender, I don't want to lend using cryptocurrency as collateral. I don't want to lend into a pool that only uses crypto, because if crypto really crashes, if we have one of those times when ETH falls from $3,000 down to $1,500 because of some flash crash or something happens with the economy or something, I don't want all of my collateral, all of my counterparty risk to be in cryptocurrency. Sometimes I want it in some sort of real world asset. Sometimes I want it in invoice factoring. Sometimes I might want it in music royalty streams. I might want it in real estate. And that is tremendous for the growth of decentralized finance, is to have real world assets, or more accurately, traditional finance type assets or income streams as collateral for decentralized finance. This is a huge step. The Centrifuge, Aave, they developed their real world asset liquidity pools, and there's not, as of today, as of when I'm recording this, not a tremendous amount of money obviously compared to the rest of DeFi, but this opens up the opportunity, just like what SocGen did, just like what Maple Finance has done. It opens up the opportunity for more of that traditional type lending, which is the vast majority of most lending in the world, that traditional type lending, to come to the decentralized finance world. And what does that mean? It means when I need to borrow money to finance my working capital so that I can continue to pay my bills, so that I can continue to keep my business up. This is not lending like I need to borrow money to go start a business, or I need to borrow money to go trade more crypto. This is, I need to borrow money. I have an established business. I'm owed $1 million, but I have $900,000 in expenses that are due within the next 20 days. And if I don't get those paid, I'm either going to be bankrupt or have overdraft charges, or I'm going to have penalties imposed on me. I need $900,000 right now for the $1 million that I'm actually owed. That's a huge part of finance all over the world, and giving people the ability to connect DeFi wallets and be part of that world. One, it's going to bring the interest rates down that I might be paying, because there's going to be more capital available. There are going to be fewer players in the market. There's going to be more players in the market. Two, it gives me, those people, the Alices of the world that have these DeFi wallets, more assets, more ways to diversify, more ways to earn income, to earn yield on their money that they can deem as relatively safe, because this is probably safer than, or can be seen with the right diligence, of course, seen as safer than lending, potentially against a real estate she doesn't understand, or potentially lending against cryptocurrency that might drop in value, so crypto uses as collateral. This is just a different asset class and another way for her to diversify. And the fact that Centrifuge and Aave have built this is a step in the right direction and something I'm really excited about, because this is what is going to grow the adoption of DeFi. When we see these use cases where people are actually using it to run their business and run their life now, that is where we're going to see more adoption in the next few years, because it's the merging. It's taking how we already use debt, how we already use finance, and adapting or adopting this new technology, this new crypto, this global settlement layer of Ethereum, plus the immutable blockchain, plus the transparency, plus my ability to do this potentially without KYC, if that's eventually an option. Those are so important. So that's why I'm so excited about again this traditional finance, DeFi, kind of merging and coming together, because that's where so much of the money is and so much of the need is, so much of the increased ability to participate, which we talk about so much when it comes to crypto and DeFi. So I wanted to get that out there. I wanted to talk about how important I think protocols and collaborations like this are right now, and how important they will be. And I hope everyone gets a chance to go take a look at what they're doing with Aave and Centrifuge. And remember, don't forget to subscribe here. Check us out on Twitter @Interaxis8. Visit us on our website, interaxis.io, and we'll see you in the next video.